Okay, good morning, good evening, welcome in, guys. I have quite a fair bit to go through on the macro standpoint. Like these are days where the macro doesn't mean a lot. So I'm gonna kind of give you guys everything that I've been looking at. Second here, let me just set this up. Okay, for those of you that are in my Discord, you would have access to all of this already if you're a premium member. So first things first, once again, this one doesn't matter much, okay? I'm just showing it to you. Don't let it seep into your bias. But hedge funds, which we always talk about, that essentially always get fucked over, they were net sellers of industrials for the multiple weeks prior to this, okay? And you can see in this chart here that majority of the subsector level has been ground transportation, electrical equipment, construction engineering, et cetera, et cetera. This is the main bulk of what was sold, which is actually very counterintuitive to what's going on in the world right now. Okay, so here's why. So what do industrials use the most? Can anybody give me the answer? What do industrial companies use the most? Not metals, oil, right? Crude. And crude prices are projected to lower. So the market's a bit irrational because, yes, we are raising tariffs, which makes it a bit more expensive for all of these businesses to operate. But then as crude comes down, it pads up the profit margin. And so I think that the market, or especially hedge funds here, are behaving irrationally to this market mechanism, because if anything, you will see that there will be a nice padding of profits from the lower price of crude. Like, think about a business like Caterpillar, right? When they're leasing out these huge machineries, that comes with a lot of crude usage, right? When I say crude, it could be gasoline, it could be petroleum, it could be a variety of different things. But it's going to help them to improve their margins. So I think this short selling is almost over. I didn't look at XLI, but let's have a look at what's been going on there. So it kind of rallied very strongly up, and then now we've pulled back a little bit. I'm going to assume that this will start to come back down to once again come back into this demand zone, and then we'll probably form some kind of a weird ass pennant style consolidation here. That's the way that I look at this, purely for entertainment purpose. Don't take what I'm saying too hard, right? As usual, we project these things only for our own entertainment, right? Okay, then next. So that's one thing. One of the pieces of data that I'm looking at that doesn't quite make sense to me, and once again, I may be wrong, right? But just from the logical standpoint. Okay, then there was a good report here. I think it was put out by Goldman Sachs on the next move within the AI market. Okay, and here they talk about the accelerated shift to the AI relative value chain being priced into the stock market. Okay, and they specifically mention AI phase 3 basket, which, as Andrew's mentioned to you multiple times before, these businesses have spent billions of dollars making these baskets of algorithms that when they hit the buy button, they're buying into all of these. And you see, for example, Goldman Sachs has this ticker, GSTHAIP3. What the fuck is that, right? That's a basket. If they just click buy, they're buying into all of those businesses for that basket. That's how these algos work. They are very, very defined, okay? So then what is that basket? Have a look. This is the one. So here's the basket. And so you can see majority of this basket is actually not even AI hardware. It's AI software. So Net, GitLab, your DigitalOcean, Meta, MongoDB, Snowflake, these are all your supporting costs to AI. And so GS's analysis here is don't buy the AI infrastructure, buy the software that runs it, because that's what will be the next move. Now, whether that happens or not, we have to scan through all of these opportunities, which I'll do at some point, to see which is the best setups, okay? And obviously, if you wanted to go for an easy way to look at this, I would start from the bottom rather than the top, because this has been adjusted by year-to-date return. And so we want to look for discounts on this chart. We don't want to look for the ones that are 27% return from the year start, right? We don't want to buy the ones that have already moved. So looking from the bottom here would be a smarter choice to look at which setups here actually make sense. So that's another thing that I wanted to bring to your attention for the AI thematic secular trend. Okay. On top of that, catalyst watch for this week. We have a huge calendar of earnings, right? Massive earnings once again. Now, this week is not mega cap, not all mega cap. It's more of your small mid caps. You'll have Palantir, you'll have what else? You'll have Ferrari, Spotify, PayPal, right? Chipotle, AMD, Snapchat, EA, bunch of them. Okay, anyway, this is on the Discord. I'm not going to go through all of the names, but you can have a look at it. Eli Lilly also reports, Disney also reports, Uber, so all of them. Okay, pretty big week of earnings if you ask me. Now, tactical sentiment, which is a general trend based on algo, is now back into yellow. Red means overbought in some way. Green means oversold. And we're kind of just sitting a little closer to oversold. But my guess is that when the market opens, we'll be sitting somewhere here. Okay. And that will again, refresh all of the what do you call it? The cyclical indicators, especially the stochastic ones, which are based on heavy selling, heavy buying. Okay, then continuing on from the prime book report from the weekend, you can see that single stocks made 75% of the notional net selling. And I was mentioning last week that remember that this new Trump era is going to bring back a lot of the same things that we saw last Trump era, increased volatility in prices, which means down, up, down, up, down, up. Mentioned it last week already. This week, you're seeing it play out exactly the way we were talking about. And then I also highlighted to you guys last week that almost $1 billion was thrown into NVIDIA by retail, which means that they were about to get fucked, right? And so this, just today, I think it's down like 5%. Remember, all of this is just another reason, another opportunity for you to accumulate these great stocks at a discount. And I'm going to get into the trade war in just a second here, but understand that where valuations are right now are opportunities for you to pick up good companies with good balance sheets, good financials at discount prices. Now, not all businesses are made equal, okay? Not all businesses are good businesses. And you can buy a bad business at a good price and it's still a bad investment. And you can buy a good business at a bad price and it's still a bad investment. So remember that you have to buy a good business at a bad price, and then only are you going to make some kind of return. So this week, mostly 9 out of 11 sectors were net sold. Only healthcare and real estate were the bullish sectors. Net in notional terms with all of these other sectors, infotech as well, so your IT. And you can read more in the report here to see more about that. Look at the sector positioning for this week. Last week and this week, not very different. Real estate and healthcare, still the two notionally net bought. Consumer discretionary saw a big outflow within the past 20 days and also the past 5 days, pretty big move. And then your financials, industrials, energy saw massive outflows. Okay, so that's where your sectors stand. I haven't gotten the sector rotation heat map yet, which is the one with the overbought, oversold. But once I get that, I will put it out for you guys into the Discord. Okay, and then the next thing is, here we go. Okay, so hedge funds appear to have trimmed their Mag 7 and NVIDIA exposures in Q2 or Q3 of 2024. And then equity long-short hedge funds in particular, right? They have been low beta, implying profit risk-taking at the end of the November strong gain. So you can see how this chart's just kind of going like that. So they're kind of running away from market. Remember, this doesn't mean jack shit about the market itself. We are talking about a very specific group within the market that has the tendency to always get fucked, which is hedge funds, okay? Because they have very high expense ratios, very high fees, and at the same time, they always make bets which other whales than snipe, okay? So look at the share ownership. This is pre-pandemic levels, and now we are actually below pre-pandemic levels for hedge funds, which then later when the market starts reversing, this same group, watch, I will show you, will be chasing the upside. Okay, so don't follow this report. The reason I'm showing you this is not to tell you to follow them. The reason I'm showing you this is to show you how they get fucked. Okay, and so never follow the hedge funds because they are always going to be making risky bets, and it's not within your risk tolerance. You're not taking the same structure as them, so don't be misguided. And look at the NVDA. They're now barely below pre-pandemic levels. Okay, so this is all important. And then they have a chart here by JP Morgan showing you the share of active and passive equity funds holdings in Mag 7 relative to their total holdings in stocks. So this is another interesting one, right? You can see that between the active and passive funds relative to their own stocks, they're pretty overweight a couple of these positions. For the passive funds, obviously a lot of Apple, a lot of Microsoft, a lot of NVIDIA, right? But the active fund seems to have decreased a little bit of their holdings in NVIDIA, for example. You can see in Tesla, for example. Tesla is one of the shorter ends of the stick here. Okay. Then you have this, bonds, which I'll get to in a second. Okay. That's that. Okay, from here on out, I don't think there's anything else I want to share from here. Yes, okay, nothing else here. Okay, so now let's talk about the trade war real quick. So I don't know, how many of you, is this your first trade war experience? Because if this is your first trade war experience, then you're in for a very wild ride, unfortunately. The first trade war that happened under the Trump administration, understand that it was a very volatile period for markets. And so if you are, in this first trade war, then you need to understand, just as I said last week, expect a lot of volatility because you see he announced a thing over the weekend, knowing the market was closed. And then he has some talk planned with Canada and Mexico on Monday. And this can very well reverse very quickly. Okay. So you have to be aware that these trade war scenarios are very sensitive to price action, and they usually cause a lot of panic. Now, just to put things in perspective for you, okay, trade wars are beneficial to the country that has a trade deficit. So America exports a bunch of things, but it imports a lot of things. And so if today you were selling me more things than I was buying from you, and I slapped a tariff on everything that you sold me, the benefits would be disproportionate. Yes, some of the impact would be felt by America, but the countries that are selling the goods to America would be impacted more, especially since their trade deficits or surplus are disproportionate. So America is in a trade deficit, Canada's in a trade surplus, so therefore a trade war would be disproportionately beneficial to America. Because if you're selling more shit to me and I slap a tariff on it, then obviously you're going to pay more, right? So now the second part of this is that all of these costs will eventually be passed on to the consumer. And the market's going to price this information 6 to 8 months in advance. And this is going to cause a difficult path for the Federal Reserve. This is the real reason the market's selling off. Okay. So the market's not selling off based on the fact that the price of everything's going up only. It's just that the price of everything goes up, causes inflation to go up. The Fed then cannot predict the path of inflation, which then delays the path of rate cuts that we were on. And that's the real reason the market's getting anxiety. All right. So it's not just one part of this about inflation, because now we're about to move from disinflation to stagflation for a little while. Okay. What is stagflation? That's when the economy is slowing down and inflation is high. Okay. So that is what is going to happen or rather the market's pricing in 6 to 8 months in advance now. All right. So that's why I said I have a lot of things to say on the macro standpoint. But I feel like this is important stuff that you guys need to know. Okay. So now, specifically, technology stocks get disproportionately affected by this because they have higher betas, higher cost structure. Now, when they hire people, it's going to be more expensive. Those people are going to demand higher wages because of higher cost of living, yada, yada, yada. You can kind of get the point. It's a whole system that works on a vicious cycle, right? So because of that, we may even have a kink in the labor market data, which might result in a cooling of labor numbers, which then will be positive. But then if inflation goes up, that'll be negative. That's the reason why stagflation. Okay? You'll have job market that will become weaker, but you'll have inflation that's going higher, which means the economy is deteriorating while inflation goes up. That's going to lead to market slowdown while inflation is up. Then that's likely to happen sometime in the middle or the end of this year. Okay? So market's pricing that shit in now. So don't be surprised when end of the year, this shit's just rallying because all of that is priced in now. All right? Clear? If you're clear, say I'm clear. So that I understand that you understood. All right? Okay, so look at NASDAQ here. I'm just going to jump in the technicals very, very quickly. And then I'm going to hand it off to Andrew because I don't want to drag this on for too long. Very simple. We came down all the way into this potential support last week, and then we bought off very strongly off it, right? And so this week, very similar playbook, I would say, right? Coming back into here, into the pre-market, would then allow us to find a very nice risk to reward ratio scenario for a potential upside trade, right? Now, of course, we'll see the data as it confirms, but this would be a very, very nice spot here, once again, to pick up a long position. And then imagine if on Monday he announces, oh, wait, we were just kidding, haha, and then boom, market rallies again, right? So I like to take these bets when they provide an attractive risk-reward structure. And there's a very high chance that if we come back down into here and we bounce, then I'll take a long position heading up into at least 21,200, which is the previous level of support, okay? All right, S&P 500, you can see disproportionate, less violent in terms of the drop, but still broke last week's low. So this is the one to actually be wary of. In fact, if I were to make a choice this week, I would go long on QQQ instead of going long on SPY, okay? Because you can see that the drop here broke the previous week's low, but versus the NASDAQ, which has actually is still hanging out here. Now, obviously, this is pre-market. Post-market will be a different scenario. This overnight session, pre-market will be a different scenario. And we will go through this again pre-market just to kind of see where things are at. Because remember, after this market closes, London will still have a trading session, and then we'll see how London does as well, right? Okay. Now, closing out my comments, the 10-year yield, almost non-affected. We'll see how this does today, right? This is one of the main ones that we want to have a look at as the yield remains down. Now, the one that's causing the mayhem, though, is the dollar, right? This is what everyone is freaking out about. And this is one of the offshoots of what's going on. Because remember, a trade war makes US in a more dominant position. And then that also will delay monetary policy, which means the dollar is going to be stronger for longer, right? Remember, what happens when monetary policy is delayed? Less money injection, right? So this was like market pricing in, oh, we may get monetary policy back loosened. And now all of a sudden it's like, haha, just kidding, boom, right? So the delay of the monetary policy being loosened means lesser dollars available, which makes all dollars more expensive. And so therefore, all dollar-denominated debt and instruments go up go down in value. So this is going to cause a lot of mayhem for dollar-denominated assets. The valuation of those assets will go down. And then the projection of when those interest rates that get cut will have to come back later on. So the dollar here is the main thing, but the bond market still reacting. I mean, not really reacting so far, but this is also because I think this was largely priced in. Okay. And then you'll have the VIX, which is at 3% right now, but I think in the morning it's likely going to be somewhere at $20 or so. So that's what I have for you guys in terms of updates. I posted a bunch of things that will help you to understand who is which sectors will be affected. Also, read up on these. These are important. But yeah, apart from that, let's look at the data that Andrew's going to provide to kind of give more color on this, and then we'll answer all your questions.
All right. Like I said, I don't have a ton because the move happened in the pre-market after hours, whatever you want to call this. So let me share my screen with you guys real quick and I'll show you. So by now, if you've been attending these since last year, we've had a lot of conversations about expected moves and how to understand implied volatility of contracts and position yourself for it. So it should come as no surprise that if we look at the implied volatility of SPY contracts for this week, our low is 591.30. And I think we're currently sitting somewhere around there. Let me double check. What is SPY at? 589.95. So essentially, right, we already hit that. So let's dig into some of the things that kind of gave us some insight. So one of the first things we saw last week is we saw some pretty interesting flow on SPY. I want to say we were pushing up pretty nicely, and then we saw these orders come in on the 29th. 579 puts for February 21st, 3.3 million. Kind of caught our eye. I picked up some of those and swung those as hedges. So if you took puts going over the weekend, obviously you should be sitting pretty at open tomorrow. One of the other things that we looked at was the NAMO, right? And if we take a look at the NAMO here, if you've been attending these, I love this tool, learned it from a very experienced trader. Um, you're up near the high, and so the risk to the reward is to the downside, right? And if we look at the short term, we were looking for continuation into the downside, and it looks like that's what we're going to get. So I'm expecting this tomorrow after close, because this only updates when the market is closed, that we're going to be sitting somewhere down here preparing for that bounce to the upside. How far will this drop? I don't know. I would assume maybe down into this area would be my guess if we stay down tomorrow. But either way, the short term was showing that potential move into the downside, right? If we look at the algorithms here, we can see that there was some pretty interesting flow that came in on the back end of February that was pretty bullish. So price sold off obviously on Friday, and the algorithms got pretty bullish, as you can see. So if tomorrow the algorithms stay pretty bullish or continue to get even more bullish, that's a really good sign and insight into the fact that the market could be looking to reverse, whether it be in that demand zone or we get a liquidity sweep or something of those sorts, right? Um, and then if we take a look at the flow, right, and kind of where was money moving um, going into the close of Friday and into next week, I always like to look at the 5 days, give me kind of the big picture. And this is going to be something I'm going to be watching tomorrow very closely because obviously this is going to be, severely much further down. But as you can see, although price is falling, it makes sense that puts would be increasing, right? Because people are going to buy puts as price is falling, especially because price falls faster than it rises usually, right? We take the stairs up, we take the elevator down. So people are very quickly to reverse their positions or grab hedges. But what doesn't make sense is the fact that they held all their calls. So why are they holding all of their bullish positions if price is falling? Usually, this is indication that the market could reverse. So tomorrow, obviously, we're going to be sold off pretty drastically tomorrow morning. One of the main things I'm going to look for is what does the net flow look like on the 5 days, and do we see calls increasing tomorrow? If we see calls increasing tomorrow, it's a good sign that they're probably positioning for a reversal. Very similar to what you saw these other times, right? As price is falling here, you can see they're increasing their bullish positions. As price is falling here, you can see they're increasing their bullish positions. And then you get your reverse. So something to pay attention to tomorrow. If you're in my server, you have access to this command. You can pull it up. You don't have to, have a subscription to the website. You can just type it in. I always do it on the trading floor, but you can just type it in on the bot channels, right? Just backslash net flow. You have access to it, so you don't need to wait for me to post it, right? You put market, not SPY, because this takes out all the hedges. And then you put in 5 days, right? And that gives you access to that information. So you guys can look at it tomorrow. Definitely something to pay attention to at close tomorrow when the market's done and all the flow has kind of come in from the shock of the gap down that's probably going to happen. So definitely something to pay attention to there. And you can see the visual of what it looks like. So definitely something to pay attention to tomorrow. So the main things I'm going to be looking at tomorrow, probably three main things I'm going to be looking at tomorrow. One is the algorithm getting bullish because that's a visual of live flow data. Two, where's money moving in the market? And then three, does the NAMO kind of line up, setting up for a potential reversal? And then the last thing that I wanted to talk about is the golden pocket. And so if we take a look here at SPX Black Bull, right, which gives you the 24 hours, you can see that this pullback, although it is scary and frightening, is doing exactly what it's supposed to do, right? And we talk about this all the time. If you are in sessions with me or you're in the group or you've been a part of these sessions for the better part of, I don't even know, like 3 months now, I think we've been doing it, T, or 2 months, um, that this is wave structure, right? Stocks move in waves. You have a wave up, you have a wave down. You have a wave up, you have a wave down. And what's really interesting about this wave structure is if we bounce in this area, then we make a higher low, right? And so you start to see potential trend reversal. And so right now, you're starting to see stupid shit on Twitter and people calling for crashes and calling for corrections and all of this stuff. And these are places where you want to look for opportunity. Obviously, you want to wait for a bounce and you want to wait for buyers to step in. But these are areas where you look to take risk. And if we look at the gamma exposure, I mean, we were saying, hey, we need to see a close over 6,100 to feel comfortable, saying that this is going to go even higher. And if you don't get that close over 6,100, then you want to be very cautious, right? And, we can look at, the gamma exposure here and how it kind of closed, and we were right around that 6,000 level, right? And so obviously we broke that 6,000 level. We'll see how this opens tomorrow when all the levels kind of settle. Um, but there's probably going to be new levels that pop up, and we'll take a look at those tomorrow morning once everything kind of settles. But right now, I mean, those are probably the main things that I would be looking at if I was looking to, take risk here going into next week. So one, the weekly move is already hit. So if you swung puts, the playbook is 5 for 5, essentially, right? If you didn't swing puts, then you got to look for an opportunity for a potential bounce. Remember, you don't want to go in and buy puts after a massive gap down because you're overpaying for your contracts, right? Somebody else bought those contracts for like $1.20 and they're going to open it like $7 to $8 a contract. You're paying 4x to 5x what you should be paying for those contracts. So you want to look for the opportunity for the reversal. So you're not buying these overpriced contracts. You want to look for, entering these positions at these swings. So, and then lastly, if we take a look at the bot, right? Again, if you're in my server, this bot has been fantastic, right? Alerted short back on February 24th, and we can look at the performance there, right? This is right here. This is February 24th. That's when it alerted. The next day it gapped down. Although you had this big bounce right here, it still couldn't close over 6,100. And now you're going to open right somewhere up, down, around in this area, right? So keep that in mind when you guys are looking for opportunities this week. You're looking at positions, right? We're really watching to see if we make that higher low. And if we do, this and the tariffs get taken off the table, this thing can reverse very quickly the same way that it just gapped down overnight, right? So those are a few things to keep in mind. One, looking for the NAMO to go into oversold territory, opening up opportunity. That aligns with T's, I don't know what you call it, T, but your like trend indicator thing,
And tactical sentiment.
technical analysis indicator thing. So those things usually align pretty well. So you can use either or you can combine the two. One, do we see the flow of options money moving bullish as price sells off? Two, does the algorithm stay bullish with the massive sell-off? That could be a huge indication. And then, do we hit that golden pocket? Do we get the bounce? Do we get the nice risk to reward that we're looking for that potential move to the upside? So, with that, I will open it up to you guys. We got 30 minutes to get through questions, and then we'll call it a night.
I don't know if I mentioned, but cryptos are on discount. If some of you don't own Ethereum, this is a good spot for you to start a position in there. For
Yep.
long term, I'm talking about years position, right? All these fears moments like this, a good times to pick up cryptos for long-term investing.
Yep.
Yeah.
So one thing right here with NVIDIA. So we talked about 125 quite a bit. If you guys, were part of past sessions or asked me questions throughout the week, I had mentioned, hey, we need to see price closing over 125 because what that means when I say buying pressure, that means the market makers are short. So if the market makers are short, they have no incentive to push price to the upside because they don't have to. They're going to collect all the premium from all the contracts. So if market makers are short 125, then they have no incentive to push price over 125. And that's what you see, right? You see the price get rejected here. And then you had buying pressure here at 120, and it broke, obviously, with the news. So now market makers have no incentive to push the price up, right? So market makers have no incentive to push the price up, not to mention they also could be selling shares short to hedge the risk from that other position, right? So really, if you're looking at this, you don't want to be getting into short-term contracts uh, around this 119 area unless you see something shift. And the golden pocket for this is all the way down, oops, right here, right down in this kind of 110 to 103 area. So this could essentially get pushed all the way down into this area and then look for some buyers to step in. That would be the golden pocket on the longer term time frame. So definitely something that I'll be paying attention to tomorrow. Also, the monthly expected move, I also started adding these to the charts for you guys. The monthly expected moves are 137 and 100 based off implied volatility. So could come down into those areas as well. And for you guys who know, if the golden pocket breaks, right, it can come all the way down into the low. So keep that in mind as well. Okay. Apple. Apple rejected the golden pocket perfectly. So if you guys remember the Apple play, I think T also took Apple. We talked about it a lot at this 220 level. This played out almost to perfection. Literally, earnings went right into the golden pocket, rejected the golden pocket. And now, what is Apple sitting at in the after hours? I'm going to guess 225. Where's it at? Who knows? So we're going to go ahead and get rid of this. So we'll just leave that for now. We're going to grab this. Boom, boom. My guess is 228 to 226. What is Apple sitting at right now in the after hours?
It's not down so much. It's down
At 229.
2.96%. Yeah,
So it's essentially right at, and it looks like it might have tapped. Did it tap it? What was its low? Its low was 226.60. So its low was in the golden pocket. So came in, tapped this area, and then it's starting to bounce. So I think if you wanted to get in here, 225 is the level that you have to watch. We can see if that exposure is still there real quick. But this played out pretty much as expected. Let's see. Yep, buying pressure off of 225. So this is now buying pressure. So those positions flipped right there. So I would say as long as it stays above 225, it'd be okay. If it loses 225, you're probably looking at more downside. But this played out. I'm just going to put a golden pocket right here. And then I'm going to get rid of this fib. There we go. So if I was doing this before the move, I'd usually just draw a path down like that and then back up. So, that's what you're looking at. Yes, I agree with T. That's why I was thinking it will probably come down lower, right? If we open, like let's say we open, the hope would be, right, in a perfect scenario. Let's say in a perfect scenario, we would open somewhere around here. and then we would get a flush
Yep.
down into the golden pocket,
Yep.
and then the buyers then would step in when everybody goes short, and then they would rip it into the back end of the week.
Mhm.
Would be my guess. That's why I was saying you want to watch for those things. The algo flow staying bullish, the dark pool activity, right, would be another thing you pay attention to. The options flow getting bullish as price sells off, right? Them building their positions as price sells off. These are things you want to pay attention to. For the people that have been a part of liquidity sweep conversations, right? This is a classic liquidity sweep situation. You take out the high, right? That becomes your stop loss. You reestablish the previous high as the resistance, and then you get your sell off, right? Very easy evaluation. This is why I like longer time frames because these things happen also on the 5 minutes and the 1 minute charts, but it's easier to see them happen on longer time frames and be able to position yourself. Tesla. So Tesla in the short term, what is Tesla at right now? This is the hard thing when things all gap down is not even in the same area. Okay, 384. So Tesla is at 384. So you're like somewhere around this area.
It's not that bad. It didn't get sold
Yeah,
up,
I was
sold
gonna
up.
say it's not. I mean, until you break this like 375,
Yeah, that's when the real panic happens.
I think, yeah, I was gonna say that's when things probably get a little interesting. Let's take a look. Oh my gosh, 150 million,
Oh wow, didn't even see that.
91 million and 400 calls for April or May.
For me.
That's wild. Yeah, somebody's getting bullish here. Yeah, there they are right there. 92 million on 400 calls
That is so
for
weird.
May. Look, so you can see the actual money. Like, see how the price is selling off and somebody's buying. So this is why I like to look at the options flow. Like this is the last 5 days. And so you can see how somebody is starting to get very aggressive buying here. Let's take a look. So biggest level is looks like 412. Dealers are long 412, so they obviously want the price over 412. That expiration is 2/7, so that's this week, most likely. So I wouldn't be surprised if we're back over 412 by the end of this week. Um, Buying pressure off 385, buying pressure off 390. So you got a small amount of buying pressure down here. So, and then buying pressure off 440. So there's definitely some activity happening here with Tesla, from a data standpoint. And then obviously, I think if we look at this, it's still the same. I don't think anything's changed. Yeah, it's still 400. So 400 is still your biggest level. So I would definitely watch this 375-ish area. I don't think this is a bad place to try to go long, possibly. From a risk to reward standpoint, you'd be like, let's say it's at 385. So it'd be like here. This is still the golden pocket. So, it hasn't broke it. And then you'd be looking at like a risk to reward situation like that. So I think a buyer step in here could be nice. And then over 400, you most likely get your move up into this area. So I think what did I say? 412, 412.50, I think was it. Add that level real quick. My chart. 412.50. Selling pressure. 1250 real quick. There we go. Sweet. There we go. And we'll wait to see what happens.
Likely into 375 to find a bounce there with Tesla.
What was that?
Oh, I was gonna say likely to 375 to find the
Oh
buy.
yeah. Yeah, I wouldn't be surprised if we came down into this level.
Yeah.
Let's see. Ideally, we could come. I think this was the wave. Yeah, it's been bouncing right off of this golden pocket area.
Yeah, literally the same spot.
Yeah, so I could see it coming down into there. We'll just do this just from a visual
And if they
standpoint.
really wanted to fuck people with a liquidity sweep, it would be down into 360. And
Yeah, oh yeah,
then
yeah, for sure. There we go. So it could be something like that. Just do this real quick. And then I'm going to go ahead and get rid of this. There we go. A net and take two. What's it at right now? So this played out pretty well, but obviously this is going to get worked overnight with everybody else. So 105. Okay, so we'll get rid of that. 105. Let's say this is the high. That's your low. You're right in the golden pocket, it looks like. Gonna get rid of the let me just put this real quick. There you go. And then we'll get rid of that. Okay, so we know that's wrong one. Okay, let's get rid of that. Let's put the other one back up. So 104 to 102 would be the golden pocket bounce area on this retrace. So I'd be looking for something like this. And this would be, long that. I don't think there's much exposure here. It's all a mess. 400, but I think there's some issues there. Um, oh, it's split. That's what it was. 110, buying pressure over 110, selling pressure 107, 118. So 110, it's at 105, 118. It rejected at 118, so this selling pressure did hold. So that selling pressure did hold. Buying pressure at 110. That's what it was, wasn't it? Can't remember. Yeah, buying pressure at 110, selling pressure, and then 107, which is going to be below. So there you go. Something like that probably is what I'd guess. Like I expected to come down, finish the retracement, and then off the golden pocket and finish this wave up, right? Remember things move in waves, right? So that'd be kind of what I'd be looking at. T2. And what's this at? 179. If you guys are gonna ask me something, you got to tell me what it's currently at so I know what I'm looking at. If you don't tell me what it's currently at, then I'm not gonna chart it. 180. Okay. So 175 and 195. So let's go to 195, which hasn't quite hit yet. A little bit of space up there, and then 175. That was gamma resistance as well. 180 means you're still in the box. So you haven't broke the box yet. And this just looks like a retracement of the whole wave. So that puts you in the golden pocket. So you'd be looking for a bounce around this area. Let's see. Order blocks. That's what I don't have on. I'm like, where's my order blocks? There's the order block. I was like, there's your buyers right there. Thought my charts were looking a little light. Yeah. So, and then you got buyers down here. So you want to see these buyers hold again, like they did here, and then push it back up. And then your first target would be like if it came down into here, you'd just retrace that, and that would give you your upside target. Once you kind of figure out where the buyers step in. You can see here that these sellers are holding price down though. See how they're holding price down? So once you break this, then this thing should open up pretty well. Yeah. Some buyer bought up here, which is pretty interesting in this bull flag. So some point it should, I think, break through there. Okay. Was there anything else on that one? Let me check real quick. Only 13 minutes left, guys. Just a heads up. Doesn't look like much. A little bit of buying pressure at 190. Nothing crazy. Snow 172. I think it's in the golden pot. Well, it was in the golden pocket, didn't it? No, it didn't break. Okay. So we talked about this one. So it's at 172. Ooh. So these sellers are obviously still holding here. Right here. These sellers are holding price. So we can go ahead and get rid of these.
I was just looking at this.
We can go ahead and get rid of these. This broke. This one is still active. And I don't know if that one's still a main level. Let's check. Yeah, 170 is still the main level. Okay, so you're at 172. So 170 holds. That's good sign. If you say that this is the top of the wave and this is the bottom of the wave, then you technically can come all the way down to 165 to 161. That would be an entry point that I would look for. If you're looking at it on a smaller time frame, right, then you're technically, I think, in the golden pocket, right? So this would be your high, and this would be your low, and you're at 172. So you're inside this kind of golden pocket here on this 4-hour wave, right? This is the hard thing, right? Depends on, what time frames you guys are looking at. These
And
things
if you bounce here,
bigger time frames.
If you bounce right here, Andrew, this is a good spot to enter long because snow is on that list of the GM.
Yeah, the AI list you were talking about.
Yeah, exactly.
Now check this out, right? So see this wave right here, right? For people that are looking for shorts, these are the areas that you look for shorts, right? This is your low. This is your high. Look where it rejected. Okay. So you can use it both ways, right? So that would have been a good entry. Obviously, you would wake up to profits, right? So if things bounce, right, I still have this getting up to about 195 to 207. That's the golden pocket for this move. So if you guys remember, this was the entry points down here that we talked about. So it's at the tail end of the move, but if it breaks this order block right here that we just talked about, then it most likely goes into 195 and then up into 207 potentially. So Still some upside there. I ideally wanted it to pull all the way back down and give a really good entry, but it didn't happen. NVIDIA. NVIDIA. So I started the session, right? So you have an order block here. This is at 113.97. I think NVIDIA is at like 113 something, right now. What's it at?
112, I think.
112?
Yeah.
Yeah, 113.46 is what I see. So obviously you want to see this order block hold.
Oh
We
yeah,
don't know if it's
113. You're right. 113.50 right now.
yeah, if this order block doesn't hold, I'm most likely expected to come into 110 to 103. Monthly expected move based on contracts is down to 100 or up to 137. So we'll have to wait and see kind of how it plays out. But if you wanted to try to get long in this order block, you could. Just know that if it breaks, it's most likely coming all the way down into this golden pocket here, which is a golden pocket on the weekly, right? So we talked about this in a past session, and I spoke about, I liked this wave to give me kind of that insight into, where it could possibly go. So that's what we're looking at with NVIDIA. There's not a lot of like buying pressure and selling pressure levels down here. They were more up high, and we broke most of them. So now we got to kind of wait and let positions reset because remember, market makers are not going out and building positions. They're the liquidity for people that are building positions. So what's going to happen is when price opens, people are going to rush in and start buying contracts, and that's going to create new levels for the market maker. Right? So, if we come back and look at this, well, maybe there are already some new ones. No, 118. Yeah, so see, we're not even down there yet. See how there's nothing down here yet? So like 119, 118. So what's going to happen is tomorrow when the market opens, people are going to rush in and start opening positions, and that's going to create new buying and selling pressure levels at the prices that we're currently trading at. So you don't really have much to go off of from a data standpoint. Melly got smoked. What's Melly at? So Melly just about hit the golden pocket. You can see our trade actually played out pretty nicely. Again, for people that are following along, entry point was the golden pocket, and we said target was up here around 2,000. It looks like it hit, like maybe $20 off. Looks like it hit a high of 1977, so got pretty close. So let's same thing we've been doing with all of them. Let's kind of figure out the wave structure here. And so this would obviously be your wave, right? And so it didn't quite hit the golden pocket. It doesn't always, right? Things aren't perfect. So now if you said this was your high, then you're looking for a retrace. And so then you're looking for your entry point, which would have been 1755 to 1724. So might still have a little bit of downside here. Maybe back down into this area. We'll have to wait and see. But I'd be looking for a bounce somewhere around this area. That's what I'd look for. There. Go ahead and get that. So it's kind of what you're looking at. Shack 118, no overnight. Shake a Shack. They got good burgers. Okay, let me move into a longer time frame here. Okay, so I would be using this wave here for me personally, so I'd get rid of that. And I would look for entry around 98 to 92 would be where I'd look at for an entry point. And that would probably give you a nice cup and handle, to be honest. Like if you got a nice little trend down like this, everybody and their mom would be looking at that cup and handle. I don't know if you're going to get much data on something like this. Yeah, you got some clear levels here. 140 and 120, like both of those levels. So super clean levels here. 120, which obviously you're currently sitting below, and 140 is the resistance. So that's the exact resistance where you rejected. So I'd say below 120, I would be looking for it to come down possibly into that golden pocket. Um, and then I'd look for an entry point down in this area. Yeah. XOM 106. So XOM is back in the main golden pocket, the main level. So we had our first wave. We obviously retraced the whole thing. So we're back to this area, which is it has to hold the low of the golden pocket, which is 102.48. So that's going to be the question. It didn't bounce here, so we'll get rid of that. And we'll wait and see what happens here. Looks like the low of this order block is 105.90, so you might have broke that. We're going to get rid of that. So you're looking to see, it might even try to liquidity sweep this low over here, which is like 105-ish. So you might even come down and try to liquidity sweep that. So we'll have to wait and see if buyers step in on this after the earnings report. I think Chevron increased their dividend again, so they're clearly not worried about their profits. Uh, Caterpillar 359. Okay, so Caterpillar is another one, right, that played out really nicely if you applied risk at the correct time. So that would have been this is your high, this would have been your low, that would have been your golden pocket right there with a liquidity sweep, right? So you have an established low. You can see the buyers stepped in right there. They swept the liquidity into the golden pocket, into this larger weekly order block. And then the buyers stepped in and they pushed price, right? So if you're at 359, it's a little far. And then I want to say, did it hit the golden pocket? Was this a golden pocket? Pretty much it'll hit the golden pocket, a little overshoot. Um, Massive 369 to 364. You're at 359, so you're like down a little bit below it. I'd like to see it open in the golden pocket. There's a lot of buying down here though, so I would just look for buyers to step in. And then let's see if there's any key levels. So is it earnings? Yeah, earnings gap down. Gotcha. Let's see. Caterpillar 330. So it's got support at 380. Never mind. Yeah, nothing there. So let's see if there's any levels from a dealer standpoint. See anything from a gamma standpoint. Um, Buying pressure at 390. So dealers are short, so they've got no incentive to buy this up. They can just sit and collect all this premium, which isn't much, but I guess it's a lot for this stock. So I would say as long as it stays above 348, I would be okay. But I definitely wouldn't. I mean, I wouldn't be surprised if it comes back down into this area. I think it's on the weekly that you have this yeah, you have this massive order block here on the weekly. So I'd like to see it bounce somewhere in this area again. All right, guys, it's gonna wrap it up. So hopefully that helped. Um, we will see you guys tomorrow mornings for the ones that are in the group. Other than that, you guys have a fantastic night. Uh, Mentally prepare yourself to be down on positions if you were long, right? And reevaluate positions. And we'll see kind of where things kind of settle tomorrow. Short term, I don't know. What's your short-term target for Bitcoin? I think it hasn't even broke the box yet.
No, it hasn't.
I was like, it's still technically just sitting in this box.
Yeah. Bounce right off it too.
Yeah, I was gonna say, like, technically you're just sitting in this range here. And it looks like it bounced in this order block again. So technically nothing has really changed here yet. I have it coming down eventually into 68 to 63,000, but I don't even know if that will happen. If it breaks this high, then things are going to open up tremendously. But I would look to see a buyer step in here again. You've got two sets of order blocks down here that have held pretty well so far. So unless those break, I would be very surprised. But this is just still sitting in a box. Hasn't really done anything yet. So 88K, yeah, maybe. Yeah, 88K would be like the low. Would be this order block here. If these break, then I see it coming down pretty far.
Yeah,
If these
70 would be my ideal spot to buy some again.
I think 70 is right in line with where I'm at. Yeah, you're like right above me.
Yeah, literally
So
there.
I'd be good there.
That would be beautiful. I mean, I would put like, 5% of my portfolio into that.
Yeah. Yeah, absolutely. Because if it comes down to here, so keep in mind, guys, if it comes down to like even to here, right? Because it doesn't have to come to the golden pocket. Like let's say it comes down into this area, or it comes down into this area, right? That opens up wave targets
Yeah,
once it breaks the high into 124,000, 124,000, and 144,000.
yeah.
So
Oh,
that's
also, I was gonna say, if you're someone who doesn't own Bitcoin, don't try to guess where the bottom is. Don't try to
yeah,
guess where to enter. I would say if it gets down to 80, you buy a little bit. If it gets down to 80, 75, you buy a little bit. If it gets down to 70, you add your last tranche there. So
yeah,
as it comes down, but don't put big chunks into it at different points, thinking that you know exactly when it's gonna bounce,
yeah,
because you will never be able to figure that out. Like it could just as easily never come down to 70,000, and you don't want to lose out on the opportunity of an averaged in position. So be smart about that. As I always say, just add things gradually so that you don't have to guess where the freaking bottom is. Don't try to. There's no point. You're servicing your ego, nothing else. Just add slowly. Okay. I
yeah.
don't own Bitcoin, but I hold Ethereum. Yeah. So I sold my Bitcoin when it was like 92,000. And then now I'm waiting for the next cycle, right? So just be patient. That's all. You can
Yep.
add Bitcoin when it comes down. And you don't need to add it by buying actual Bitcoin. You can buy ETF now.
Yep. There's
HODL.
so many different options.
Yeah.
So, all right, guys. You all have a fantastic night. When the recording's done, T will post it.
Yep.
And other than that, guys, take it easy. I don't have an entry for Ethereum. That would be on T. I don't even chart.
Ethereum. Okay, let me give you very simple, honestly. Actually, the ideal entry was right like today. I missed it today. This was your ideal entry right here at
Oh yeah.
186. And now that it bounced very, very strongly off this demand. What I want to watch for is this area here for a potential rejection. And if it holds below this, then you might get another entry. So you don't need to rush into buying Ethereum right now. Wait to see how it reacts here. And if it reacts unfavorably and comes back down, you'll get an opportunity to add here, here, here. If it breaks above, right? If it breaks above this level, then wait for it to come back down and validate this level as a support. And then your entry can be here otherwise. So either you wait for the rejection and buy it here, 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 or you wait for the break up and then the bounce down to validate this level and then buy it here. Either way, you'll have to average into this zone, this area right here. That would be my ideal entry for Ethereum. Though, wait for the volatility to be over, because Ethereum has this weird thing where the more people that are buying and selling Ethereum, the more it costs for you to buy it. It's called gas, Ether for Ether. So the transaction cost will be pretty bad right now. I wouldn't want to pile into it just yet. Just hang on a little bit, and you'll be able to get a entry when the volatility is lesser. When everybody's buying and selling Ethereum, the price of transactions goes up. That's one of the downfalls of Ethereum versus Bitcoin. So just
Hey,
be aware of that.
stop.
Yeah, I know. I the same thing happened to me, nerd. The same thing happened to me. I missed the entry here. And that's okay. That's totally fine. My average entry for Ethereum is way below this anyway. It's at 1,600 here. This is where I bought Ethereum the last time. So honestly, if it doesn't come down significantly, I'm not going to add into my position because there's no need to. But if it bounces, nicely around this area, then, we'll see. I'm more excited to buy Bitcoin than I am Ethereum right now because I want it to come down more. But yeah, thank you all for attending the session today. Recording will probably be posted like 1-2 hours from now. Hopefully, it all depends on how long Zoom takes to render the damn video. But I typically have it ready to go pre-market. I'll probably do it earlier, but I'll post it on both groups. Thank you all for attending. I appreciate it. Have a good rest of your night, and we'll see you in the pre-market morning session to see where things are so that we can get a plan ready.
Later, everyone.
Later. Peace. No problem. You're welcome.